Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at some of the levels where Bitcoin is possibly going to go up to in this current 60-day cycle, as well as further afield. I'm also going to have a look at the pullback that we can expect at the end of this current 60-day cycle. Very important to have a look at the levels in terms of the timeline. I'm also going to have a rundown on the timeframes to show exactly what the various timeframes are showing for Bitcoin and whether there are any signs of this current bull market losing momentum. So we'll have a look at that. And I'm also going to have a look at the Bitcoin miners as they start to now outperform the Bitcoin price and where many of the analysts are now predicting where the Bitcoin miners may go. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm going to actually start off from the first cycle back in 2013, which ended at the end of 2013 here with this yellow line. And in recent weeks, if you've been watching my videos, you'll know that I've been showing you a particular pattern, which is the inverse head and shoulders pattern, which seems to be always forming before we get to the culmination at the end of the bull market. So just to set you the stage for the levels that I'm going to be giving you with the current bull market, I just want to set the stage in terms of these patterns that have been continuously forming over the last 3 cycles and currently doing exactly the same. So this was the end of the first cycle at the end of 2013. But if you look over here, what we had before the big breakout, before the blow off top here, before this happened, you can see quite clearly we had a left shoulder, a head, and a right shoulder. Once we broke out of that, that was the catalyst for the big move to the upside, where the market just left everybody behind. And then in the second cycle, which ended at the end of 2017, we also got another similar pattern here, the inverse head and shoulders. Before we had the big blow off top, we had the left shoulder, we had the head, and then we had the right shoulder here. And then once we broke out, you can see we came back and retested that neckline at around about $780. And then off we went to the end of the bull market. And this is where the market just leaves you behind. And back in the last cycle, where we ended the bull market in November 2021, once again, at the neckline of around about the $10,500, what we had was a left shoulder, a head, and a right shoulder, the price breaking up above the actual neckline of that 10,500, coming back to retest it as support, and then off we went for the double top that we ended up in 2021. And in the current cycle, we had a much bigger inverse head and shoulders here at the neckline of the previous high, around 69,000. So we had the left shoulder, the big head here, and then the right shoulder. And once we broke up above that at the 74,000, we've come back, retested that in April, and now we're going back up again in that big blow off top that we're hoping for the end of this year. However, in this particular cycle, we've had 2 inverse head and shoulders. So this was the bigger one, which is playing out, but the recent one, which I highlighted a couple of weeks ago, if you zoom in the price action over the last 6 months, we've got this neckline around about the 110,000. And what we've been doing is to wait for this breakout from the left shoulder, the head, the extended right shoulder here. And finally, we've broken out from that inverse head and shoulders on our way for the blow off top, wherever that's going to be in the next few months. And the question is, are we going to come back and retest that neckline like we've done in the previous cycle? So that's obviously a possibility, but we're going to have a look at those levels now. So I just wanted to set the stage, why we're breaking out, and the fact that we're coming towards the end of this bull market, and this is usually what happens, and the market seems to be now wanting to leave people behind, those who've been expecting pullbacks down here. So I've got this red vertical line here drawn, simply just to denote that this is really the end of this year. So any time between where we are to this red line, we're going to be really coming to an end of the bull market, unless of course we have an extended 4-year cycle. But because we haven't had one of those yet, it's best to just mark up exactly what we've had in the past as a continuation of the previous cycles. So the other line I've got here is the current trend line, which started back here at 74,000. It's found resistance here at these levels at around about 107 and 112,000, and we're making our way back up to that trend line. So there's a good probability that we're going to find some sort of resistance at that white trend line. So we're going to follow that over the next coming weeks, and let's see whether it does that. And the measurements I want to give you, and I've done this before, so if we'll take it from the previous end of the bull market in November 2021 when we reached 69,000, and we take it to the bottom of the bear market at the end of 2022 at 15,400. And if we go across here, and we'll get some incredibly accurate target levels, and I've given you these target levels before. So previously I'd given you this target of 104,000 where we came up right at that level, and obviously went a little bit higher than that to about 112, 110. So the next level is going to be the 1.414, and that's currently at 128,000. So this looks like the most likely place where we're going to have some sort of a pullback. And when we have a look at the 60-day cycle, it seems to fit in with that time frame. However, if we reach that 128,000 in the next couple of days, let's say, then we still have quite a bit of the 60-day cycle to go. So this is why we need some levels just above the 128 to see whether by the end of this current 60-day cycle, price may want to go higher than the 128. So this is the first target that we've got, 128, between now and before we have the pullback at the end of the current 60-day cycle, which I'll go through in detail a little bit later. But I want to give you the overall picture here. So these are the larger term targets that we've got for the end of this year. So the first one is the 128,000. Then we've got this one here, which I've given you before. The 1.618 is 174,000. And then really it's anybody's guess. As we've said before, our target at Wisdom Bites has always been between 150 all the way up to 500,000, because there are so many indicators pointing in the direction towards that range. And the higher level targets here is the 2.272 at 466 and the 2.36, which is at 532. Now, when we've done these targets in the past, when the Bitcoin price was well below 100,000, these didn't look very plausible. But now that we've started moving very fast, these are now going to be looking more credible as we go much higher. Of course, nobody can guarantee that we're going to get to these levels, but depending on how fast Bitcoin goes, and we must always remain neutral, fluid, and flexible, and let the market dictate our actions and our responses. So these are all possible up here, but these are the first ones, which are obviously much more highly probable, which is 128 and the 174. And now I'm going to give you some targets in between where you could expect some pullbacks. So if we take it from the previous high here, before we had this big rundown, and then the recovery here. So this is the candle on the 9th of June, and the high of that was at 110,600. And if we take the Fibonacci from this point all the way down to the previous low here, on the 22nd of June, it'll give us some quite accurate levels as we're going up currently here. So this is the current action that we've got. We saw recently in the last few days that the price came all the way up to the 119,000. You can see here, it found resistance at exactly that level over the last few days. But obviously we're now broken out above that. So obviously Bitcoin wants to run much further. And the next level we've got here, which provides confluence with what I've just given you on the larger term time frame. If I take this white line out, on this measure, we have a confluence around 128,000. So the 2.272 here is at 129. So it looks quite highly likely, based on the Fibonacci retracement, that we're going to get some sort of a pullback anywhere around 128, 129, even 130, because the 2.36 here is giving an exact target of 130.4. So this looks like a highly probable area where there's going to be some sort of a pullback, depending on how quickly we can get there. And as you'll see with the 60-day cycle, we have around about 10 more days where we could be moving up to those levels very short in that time frame. But should we just punch through that, which will be difficult, but it's obviously possible, then the next level is the 2.618 at 134,000. So these are giving us an extra element of targets here. So 134 seems quite likely after the 128 to 130 level. And if we move a little bit higher to that 174,000, the 4.236 is giving us 163. So somewhere along the line, if the Bitcoin price is going to go to these levels, then 163 seems like a very plausible area where you could expect another pullback down here. Considering that if we get a pullback around about the 128, 130, so this is the most probable likely level where we should get some sort of a pullback. How far can it come back down? That's the main thing that a lot of people will be looking at. So if I mark this level up here, at 128 to 130. This current move that we had started all the way back to this previous low here at 105,000. So this is where we had that rejection, and then since then we've been powering ahead. So if we take it from that low and take it to that zone of the 128, 130, then a pullback down to the various levels here. If we have a shallow pullback, that'll be around about the 122 level. But usually we always seem to come back at least down to the 38.2. So the 119 seems like quite a plausible pullback level here. And certainly the 50% is also always on the table at 116,000. But as we saw in the previous cycles, when we've had the breakout from that inverse head and shoulders, we seem to come back and retest the neckline of the inverse head and shoulders, which was at 112. So the 61.8 is pointing to 112, 113. So this looks like, if the current cycle is going to play out like the previous cycles, quite a plausible level for us to pull back from and shake out most of the people who have been FOMO'd in here and then go again for the next leg. So of course it can be any of these levels, but if we are to come back to this neckline of 112, this is where we're going to be coming back down to. So if you ignore that inverse head and shoulders, the higher probability play would be the 116,000, a 50% Fibonacci level. You may well have noticed this green symmetrical triangle. The breakout that we had on Wednesday, I was doing a members video on Wednesday and was analyzing this particular channel here, that we are having a continuation pattern from down here into this symmetrical triangle. And once I'd posted the video, it was exactly at this point that we had the breakout from that triangle. So it just pays to have a look at some of the shapes of the price action, because they're always alluding to what the higher probability plays will be. And obviously since that breakout, what we've really got is that we've had a few more channels here, because once it broke out here, we consolidated in this symmetrical triangle and then another one up here. And each time it's actually broken out, and we may well now be forming another symmetrical triangle before the inevitable breakout to the upside. And if we have a quick rundown on the various time frames to have a look at exactly where Bitcoin is, if there are any faltering signs of the current bull market. On the monthly time frame, as I mentioned before, we are currently in a bearish divergence with a lower high at the moment, and obviously we're making higher highs with this current candle as well as the previous ones. But as I've said before, once we have a powerful move to the upside, then this would bring the RSI to higher levels above the previous high here and then invalidate that divergence. So hopefully, for the bulls anyway, that's what's probably going to be happening here with much higher prices. So this looks quite intact. You can see it's a very strong green candle. We're breaking out from the neckline, and the breakout is obviously looking very healthy for much bigger moves to the upside. And the 8 EMA, which is one of our indicators for the end of the current bull market, i.e. when we have a monthly close below the blue line, the 8 EMA, that will be one of the signals that we have come to the top of the bull market and are now in a bear market. And that price currently is running at around about 99,000, call it 100,000. As long as we don't close a monthly candle below that level, we're good to go. So this is really very much looking very healthy for much further gains. And moving on to the weekly time frame, what we seem to have done is to have invalidated the RSI divergence that we had here. We've now moved above the previous high, which was before a lower high. So while we're making the higher high on the price, we're now also making a higher high on the RSI. So there isn't any bearish divergence. And with the stochastic RSI pointing upwards, we may have quite a few more weeks to go here. And as we know, this can carry on going for quite a while. So again, the weekly is looking incredibly healthy. We had this breakout candle last week, and we're now progressing from that to make further gains. So this looks like with a high probability of making further gains over the coming weeks and possibly few months. And if we move on to the daily time frame and look at it through the eyes of the 60-day cycle, and please remember the 60-day cycle is really just adding an element of time into the trend. It's the only thing that really adds an element of time, i.e. we're looking at Bitcoin with a breakdown of cycles into 60-day cycles. We already know about the 4-year cycles, and there is also actually 26 weekly cycles, which I really don't go into because it would just confuse people. So I just look at the shorter term time frame, which is the 60-day cycles, and the longer term time frame, which is the 4-year cycles. So this is our current 60-day cycle from the red vertical line where we ended the previous cycle. And many people said that this was going to be a failed cycle. And my own view was that unless we close the daily candle here, then my view was that we are still in the 60-day cycle. So it looks like, as we would have expected, in the current time band, i.e. towards the end of a 4-year cycle, in the last few months, you would expect right translated cycles. And what we did here was that from the start of the cycle on this red vertical line, and the end is going to be on this red vertical line here, around this time period, and this time period is around the 4th of August, and so far from the start of the cycle to where we are currently on this candle on Monday the 14th of July, we're on day 39 of the cycle. And we also know that around 10 days before the cycle ends, we're going to get some sort of a pullback to end the cycle. So just like we did with this one here, we had around about 14 days of a pullback at this point. So anywhere between 10 to 15 days before the end of the cycle, we're going to get some sort of a pullback. So at the moment, we're on day 39. So we've got 21 days to the end of this cycle. And if we're going to get 10 to 15 days before that for some sort of a pullback from wherever it's going to be, so that will take it from 60 to 45 days. So 45 days from the cycle is going to take it to around about Sunday this week. So this gives us the timeline that for the next 6 days at least, we should be expecting higher prices or even a consolidation. We shouldn't be getting any pullbacks at the moment because we're not in the right time band. Of course, anything can happen. Please remember, we're in the realms of probabilities here. And just looking at the cycles, the higher probability play here is not to come back to the downside at this current moment. It would be for the next 5, 6, 7 days, whatever it's going to be, could even be up to 10 days. We would expect a rising market, which should take it up to the 128, 130,000 before we have the inevitable pullback into the 60-day cycle low. And this is where I've just given you the levels where we could come back to. And the lowest level I would expect is 110 to 112,000. So this looks like the higher probability play, anywhere between 112 to 116,000. So this looks like the higher probability play to me, that this gets to around about the 128-30,000, and then in the last 10 to 14 days of the current 60-day cycle, we pull back either to around about the 116,000 around here, or the previous high that we've had at 112,000. So this is the time band and the levels that it can actually have a pullback to. And we can obviously monitor that as we're going along in the next few weeks. So obviously it's all exciting stuff going on. Lots of movements in the markets. And the only thing I would say here in terms of strategy, because I've seen quite a lot of excitement and a lot of interest all coming back into the market, and this is where you would expect a lot of the retailers to now start entering the market, because we know that with this big breakout, we're seeing more and more of it on the media. So it's generating a lot of interest, a lot of excitement, a lot of bullishness. And all I would say is that we really need, for those people who want to take a clinical, open, fluid and flexible approach to the markets, this is the time to pull yourself back and stay grounded and disciplined and focused on just looking out for the signs where we may well top out in the next few weeks or next few months. We're all expecting Bitcoin to carry on in the bull market to around about the October, November, December mark, but we should always be prepared to accept the market topping out before that time. And so we should always be looking for signs of that happening. And of course, one of those signs is looking at the pi cycle. And what we're really seeing is some real movement in the pi cycle lines here. And that is that the green line, which is the 111 simple moving average times 2, as I mentioned in the last couple of videos, I'm not sure if it was here or with the member section, but you can see quite clearly the green line is curving very strongly back to the upside here. And this is what we're expecting, that the green line is going to go much higher. Once the price starts moving higher, the green line is going to turn very quickly towards the upside. And then the red line is obviously going to start making moves to the upside as well. And so somewhere along the line here, it's going to cross, and wherever that's going to cross or come very close, as we know that the prominence of the cross may not be as prominent this time around, or even not even cross and just be close, but we should be keeping our eyes on here. When the lines start coming very close together, we should be looking for other Brexit indicators, which I show you from time to time, and that will be our signal for those who want to exit the market, and of course those who want to take a much longer view, 5, 10, 15 years ahead. But for those who want to exit, we should be looking for signs anywhere around here. But certainly the pi cycle is moving in the right direction, bringing this current 4-year cycle to an end over the next few months. And just looking at the Bitcoin liquidation heat map, the prominent zone at the moment is all the way down here, which we've been talking about. That's 116,000. So that level seems to be having a confluence with our own ideas that the price may well come back in a pullback all the way down to about 116,000. And as you can see, there aren't many prominent zones at the top here, so this can go really anywhere and have the pullback at any time between where we are at 123,000 and go all the way up here. So let's see where this goes. But certainly we know that these markets do tend to have pullbacks from time to time. And from last Friday I think we closed around about the 116,000 anyway. So it may well be that Bitcoin comes back and retests that before it starts moving up. And if we move on to the Bitcoin miners, where a lot of people are now starting to show a lot more interest, and obviously it was entirely understandable that a lot of people have had a lot of bad things to say about the Bitcoin miners, especially since this point here, where the Bitcoin miners underperformed Bitcoin by quite a lot, all the way back down to this very strong trend line. If you go back here, you can see that this trend line has been very strong all along for the last 3 or 4 years. And it was precisely at this point that I was alerting the private members here at Wisdom Bytes that this is where we would expect some sort of a bounce and for the Bitcoin miners to outperform the Bitcoin price. And this is exactly what's happened so far. I've left the pi cycle on here because for whatever reason, many of the charts do actually respect the 2 lines of the pi cycle, and it just gives you a little bit of an indicator, because quite clearly here, you can see that as the WGMI Bitcoin chart, and please remember the WGMI are the Bitcoin miners ETFs. So this is the basket of Bitcoin miners compared to the Bitcoin price. And as the Bitcoin miners were outperforming Bitcoin, it came up to the green line and found resistance exactly at that point. But we've obviously broken out above that, and our target was this green box, the 61.8, from this point down to this point, give us the green box at the 61.8. And as you can see, over the last few days, Bitcoin, as we've seen with this big breakout we've had up to the 123,000 today, we're seeing relative strength in Bitcoin regarding the miners. But obviously the charts give you a lot of information, and you can see quite clearly what's going to happen here. So the higher probability play here would be for this chart to come back and find support on something that was resistance here, i.e. the green line of the pi cycle, and then we go off back towards the white line. And this white line, as you can see, has been the resistance for this chart for many times, all the way back up to here, which is in July 2023. So we're finding this channel, but as we know, once we get to the 4th or the 5th time, I would be expecting this to break out, and this is where you would expect the miners to be really going into their leverage play. And it looks to me, just by looking at the charts, that the red line of the pi cycle is probably where this is going to end. So let's see what happens. There are no guarantees with anything, but certainly this is where you would expect some sort of an outperformance by the Bitcoin miners to break out from here, and this would be a natural place for the price to come up to. And so far, from the bottom here, where the Bitcoin miners bottomed out against Bitcoin, so far from April, the Bitcoin miners have outperformed Bitcoin by 50% up to Friday's close. It went up to around about the 80% at its height. But just like here, we're having some sort of a pullback, I would expect this to be a continuation to the upside. And the reason for most people's optimism now with the Bitcoin miners, as more and more people are joining the Bitcoin miners party, you can see that when we topped out in the previous cycle, and I'm using Marathon Digital Holdings as an example, we topped out here in November 2021, just like with Bitcoin. But if you look at the previous 6 months before we topped out, we had bottomed out on this candle, and the last 6 months showed an increase in the Bitcoin miners of just over 350%. And of course, we know that the Bitcoin miners have underperformed over the last 18 months or so. And if you take this particular pattern that we've had, since we bottomed out here at the end of the bear market, what we've done is we've created this big bull flag. And once we break out of that at around about the $24, $25 mark, this could have an explosive move to the upside. We really don't know where it's going to go. I've marked up certain levels for the private members here of the levels that I'm expecting it to go. But certainly what you see with the Bitcoin miners is that you do get periods where they're really looking like they're not going to do very well, and then suddenly they have these explosive moves to the upside. And if you look at that particular move in the last cycle from here, so in the matter of just 12 months from down here to the first high, Marathon went up by 15,426%. So that was 150x just in that 12-month period. But you would never have thought that. But you would never have thought this is coming when you were in the middle of this kind of a pullback. And this is exactly, unfortunately, what happens. But we do get these explosive moves to the upside. And this is what we're really at the start of by the looks of it here. As long as Bitcoin keeps going to where we're expecting it to go over the next few months, we can expect the miners to follow. And as I've shown you with the relative chart of the WGMI against the Bitcoin price, there is quite a good likelihood that the miners are now going to be on a leverage play against the Bitcoin price here. Let's see what happens. Nobody knows the future. All we can do is look at the charts and make some sort of, and based on a balance of probabilities, we can have a look at exactly what they're more likely to do. And if you think that I'm alone in thinking this, last week we had this particular report from UBS, and they've been analyzing the Bitcoin miners, and in this case they've been analyzing the Marathon Digital Holdings, and they've got their price target raised to $203 from a recent $175. So if you look at what the current price is for Marathon, you'll see that at $203 or even at $175, so you'll see that the current price for Marathon Digital Holdings at last Friday's close was at $19.14. So that's $19.14. And if we take that to $203 or $175, according to the UBS, at $175, you'd be looking at an 8x from where we are currently. So this is what they're expecting, 8x from the current price at $175, and they've just raised that to $203. So we're talking about 10x from where we are at $19.14 to $203. We're going to go over the 10x mark. And of course, nobody can guarantee that. They're an investment bank making their own targets and predictions. And just look at them as a guide as to possible prices that these miners can get up to. And those of you who are interested in our portfolios that we run on the private member section, our passive portfolio, which we started back in January 2023 with $100,000, that is now currently at $479,356. And our trading portfolio has gone up now to $559,000. And the targets which looked very ambitious at the time of 5 million. So we've had these targets right from the beginning when we started in 2023. So at current levels, so according to UBS, if this was to 10x, then this 559,000 would actually meet our target of 5 million. However, even if it doesn't get to the 5 million, even if we get to 4 million or 3 million, 2 million, and indeed even 1 million, that would be a very good outcome, considering we started off with 100,000, and in a period of 3 years, if we can get even to 1 million, would be a 10x from there. So for those people who don't know what we do at the private member section, currently we do these ratio trades, which we started back in January 2024, and the blue numbers are the profits, and the red numbers are the losses. So you can see we've done really well with the ratio trades. We've done over 40 trades, and we're waiting for a few more opportunities to develop as well here. And if you're interested in the Bitcoin miners, always remember that you don't have to invest in the Bitcoin miners to join. A lot of people join just for the analysis that we do with the 2 videos, once on a Wednesday and once on a Friday. And we run this successful portfolio as well for those who want to take part in that. So you'll see that we do these videos, the ones in the green here saying members only. So we do these 2 videos on a Wednesday and a Friday, as well as we do these market updates every single day at the end of the close of the markets. We do a comprehensive analysis of what's happened in the day, and we all know how key information is in keeping abreast of what's going on. And this is the kind of things we do with these daily updates. And if this is something that you're interested in, then all you have to do is go to one of my videos, and below all of my videos, you'll see there's a join button here, but also in the description box, there is a Bitcoin Miners membership join link. If you click the red button here as well, you'll see that for the price of 1 coffee per week, not every day, but 1 coffee per week, if you can afford that, which comes to about £3 a week, it really is the bargain of the century. And 80% of the members have been here right from the start at the beginning of 2023. And the other 20% keep coming and going, and that's absolutely fine. You're all welcome. And whether you want to be part of the 20% or part of the 80%, you're all welcome. And always remember, you can cancel at any time There are no obligations, there are no contracts. You're welcome to have a look and see whether this is for you. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.